Welcome to TheoTrade and the Weekend Update. This is Don Kaufman. Here we are. It is June 4th, 2016. First, I start with a review a bit about last week. Then we're going to move forward, of course, to what we can actually expect in markets. And really, I'm going to get into a very specific trade setup in the bond market that we're going to look kind of forward to and probably try to execute throughout the course of this week. So again, I start with the S&Ps, which this would be an understatement in saying it did absolutely nothing in the last 4 days. So again, we had a shortened holiday week. We had 4 trading days in there. Now, again, saying they did absolutely nothing would be an understatement. Nevertheless, one of the first things I want to start with is I'm going to cruise over to the Analyze tab here on thinkorswim. I'm just going to close up that left side bar, and I've already backed up the date just to clarify, to quantify. I backed up the date over here to what? That was last Monday, and you can see the S&Ps closing in right there at 2099. Well, very nice. Where did they end this week? Yeah, at 2099. I mean, you just couldn't get more of nothing to occur in the marketplace than of what we saw. But once again, and I don't want to digress too much in terms of last week, once again, we saw fairly large intraday ranges. Okay, what that tells me on a day-to-day basis out there, you do not want to be selling options premium in the short duration. And I'm even going to go a step further. With volatility being incredibly low this coming week, we're also going to have a little bit of a warning. Selling volatility right now, which is selling options premium, has a high degree of risk associated with it. If you're going to sell options premium, it needs to be very constrained, which means incredibly minute allocations. The volatility does not get this low very often. And again, looking back in this last 4 days, the point that I'm making here with the ranges is, well, we had a couple of days. Again, we traded 2085 all the way up into, 21. These are 20-point ranges. Okay. Really 2, maybe 3 out of the 4 days of the week saw almost 20-point ranges. And if you looked at the entire week, all right, the entire 4-day week, there was only a $21 range expected all week long. And that's, again, looking backward at last week. Now, more importantly, the jobs number came out. And I'm going to go back to the chart here for a second. The jobs number came out yesterday. It was Friday, right? It comes out. The jobs number was shocking, to say the least. We're supposed to create, there's a bunch of different analyst estimates. They're supposed to create in the neighborhood of anywhere from 160 to 180,000 jobs. What was the number? 38,000. Now, I don't often look, at broader economic reports that way. I don't look at the report because, simply put, it doesn't matter what I think of that report. Order flow is going to be order flow, and that's ultimately what I'm saying is, why even bother looking at the economic news? When the trade comes out, the trade's going to happen, whether you saw the news or not. This one, though, it really caught my eye because if you looked at it and saw, hey, we're only going to create 38,000 jobs, you would have thought, that's it. It's all over for the market. We're going to tank. The S&Ps yesterday closed down 6 points on a rally back from after being down almost 20 points in the day, actually rallied back towards the close, only ending up down 6. What can you throw at this marketplace that doesn't have a degree of resilience to it? Okay, bad news. Well, no, it's not that bad. The S&Ps are only down 6. And if you're a trader and you do look at this stuff, you start to feel that frustration. And if you're at that point, good. Why? Unbelievable complacency in the market. Okay, frustration that bad news is being interpreted as good. These are still all signs, again, of a buildup of volatility that will eventually come out. And again, we're seeing signs of intraday movement that are fairly radical. When you're getting a 20-point move on an intraday basis, there's opportunity in there. However, again, markets as a whole haven't really gone much of anywhere. I know we had a nice rally, 2 weeks ago, but when you start to zoom out, overall in markets, again, extremely tight range, and we've been in it now since, well, roughly mid-March. Neither here nor there. Let's start to look forward. As I've already kind of warned, volatility is incredibly low, and it's an understatement to say that. And one thing I do is kind of almost take a temperature, if you will, of the marketplace on a week-to-week basis. And as such, you can look at 4-day options in the SPX. You can look at 6-day options. Now, again, there's a midweek expiration. That happens to be a Wednesday expiration. Then there's a Friday expiration. And if you look at the volatility of the Wednesday expiration and the Friday expiration, okay, I'm going to tell you right now, this isn't wrong. Okay? There's hundreds of millions of dollars being traded in this marketplace on 8.75 volatility. Now, I've been trading, 18 years. You just don't see things like this. Volatility, it doesn't get any lower. And that's what I'm telling you right now. You don't sell options premium with 4 days remaining when there's 8.7% volatility out there, a $16 expected move. Why wouldn't you sell that? Well, again, there's going to be Monday, Tuesday, Wednesday, right? There's going to be 3 trading days, and this thing's got a 16-point expected move. That's crazy low. Okay? And that's where, again, opportunity lies in the trade, because the options themselves, we're trading smack dab on what? 2100. Okay, we're 20.99. It couldn't be any closer. The at-the-money options are priced less than $16, and that's with 3 trading days. And yet, in all the recent movement we've seen in the market, the smallest trading days have had like $15 moves in them. This is a time, once again, and I've been just hammering this the last 3 weeks, you need to be long options. I can't stand being a buyer of options, but you better kind of feel the warning that I'm giving you right now. If you go out there and you sell option premium, you are going to feel the wrath of volatility, because it doesn't get much lower than what you're looking out there. 8.75, again, staggering. Looking even further out in time, you can go all the way, 34 days out. Is a $70 move being priced in for the next month? Okay? It starts to get a little ridiculous. And you realize, you go a little further out than that, there's an FOMC meeting. What are they going to do with the FOMC? Well, the next major news announcement that's going to come out, and you can look at the calendar all you want. Here it is. The next major news announcement that comes out isn't this next week. It's the week after that. It's the FOMC announcement. And right now, the probability of a rate increase is approximately 6%. So what are the chances Janet Yellen comes out of the cave? Yes, it's a bat cave now. Comes out of the cave and actually raises rates? Well, the marketplace is dictating a 6% chance of that occurring. So they crushed volatility. The marketplace is also crushing the chances of a British exit. Okay? So everybody's talking about the British exit. It's going to be in the news a lot. Listen, the market's not pricing that in at all. It's pricing complete and total complacency out there. I don't like it. Okay? I am not selling premium in the short duration with volatility being this low. And that's where things are going to get more entertaining here coming at TheoTrade this week. The next week is, what do we do if we don't sell premium? Don't you worry about it. We can do in-out spreads. Okay? We can position ourselves in umpteen different ways. Now, a trade setup. Let's go over to a trade setup. We know this next week, what do we know? There's no catalysts being priced in this next week. Me, I'm fully expecting this to be a volatile summer. Okay? Yeah, I'm saying the market's going to be volatile. And what? We're sitting at a 10% volatility with 11 days to go. So I am going out on a limb and saying that. But again, one thing I want to get a little bit more detailed into. Now I'm going to close up the left sidebar over there. I'm going to go, let's go to the charts. Listen, I'm a guy that doesn't look at a whole lot of charts. I'm a quant. That's why I quantify things like volatility. Now, bear with me for a second. I'm going to go to a 10-year chart. What do you see in the 10-year chart of the SPX? Nothing but upside. I mean, that's pretty wild looking at that. We're just off the all-time high, okay, inside of the S&Ps. But I'm going to open up a second chart over here. Now, what are we going to put in the second category? Let's put the bonds. Okay, bonds, people. I'm putting bonds up there. And for just a moment, we're just going to take a quick look over at the bonds. We can come in here. Again, we can maximize the grid cell. We're just going to look at the TLT. And the TLT as well, I am going to look at on a 10-year monthly. Okay, what do you notice that's interesting over here? Because there's always this notion, if you will. Now we'll put them kind of side by side. Just grab the volume out of the way. Put them side by side. You've always heard, well, when the market goes up, bonds go down. When the bonds go up, the market goes down. Yeah, maybe the market's not listening. And if you're more comfortable, instead of using the SPX, we can even use the spiders. All right, we'll put, product against product over here. We'll put the spiders next to the TLT. What do we got over here? I mean, both these things are straight up. Talk about the Fed causing some issues with quantitative easing. When you start to look at this, and again, you try to be as objective as you possibly can. It's a 10-year chart over here. What do you notice? Well, the spiders are pretty much straight up, but the bonds have been pretty straight up. So in this scenario over here, what gives first? You got to recognize the bonds, and I'm using the TLT in this case. They are a stone's throw off the all-time high of the TLT. The S&Ps are a stone's throw off the all-time high of the S&Ps. What ultimately breaks first? Now, again, if you are into patterns over here, both of them are forming. Okay, a extremely tight pattern over here. You can call it the triangle. You can call it a wedge. You call it what you want. Okay. I am ultimately calling it, both products are straight up over here. Do you believe at this point, and you have to ask yourself this, do you believe at this point that the FOMC really raises interest rates? Because the market is telling you the exact opposite. So there's times when you got to step back from everything that you hear, okay? And you got to recognize bonds have never been higher, which actually takes interest rates almost to their record lows. Almost to the record lows of the interest rates. And there's a couple of different ways you can look at the interest rate. You can look at TNX. Okay, that's the 10-year treasury. Yeah, there's been a lower print on TNX. In fact, you can go back even further in time, go back to a 5-year weekly. There was a small point where the 10-year got all the way down to 1.3%. Okay, and you're like, well, where are you going with all this? There's a trade in here. Okay, you can even look at the 30-year, which is TYX. Have a party over here, the 30-year, and this is, your mortgages are based, the 10-year, the 30-year, and we're all the way down to 2.5% on a 30-year, and that's crazy for bonds. Okay, markets are at all-time highs, and the yield has been squeezed completely. The yield, the actual interest rate, right? It's been squeezed completely out. You got to ask yourself right now, in markets in general, where is their alpha? Alpha is returns. Where is their returns? I look at the bond market right now, okay? Why would you buy it? It's at an all-time high over there. And again, the interest rate associated with it is pretty much at the all-time low. And that's why we're going to start shorting the TLT. This is actually going to be a duration trade. Now, several weeks ago, I had initiated this trade. And I'm actually going to get into, a few weeks ago, the exact trade that I did over here. A few weeks back, we initiated into the short position. The bond market sold off fast and furious on us. We covered the position. So again, we went out there and we shorted TLT. Specifically, I did the trade inside of the ZB. I got short the bond futures. I shorted the ZB. This time around, again, I'm going to explain the TLT. We are going to start to enter into a short position. When I say it's a duration position, this is a position I have intention of holding a short position. Now, some of you say, I have an IRA, I can't do a short position. Come early this week in the TheoTrade chat, we will start to explain in much more detail how you can, in fact, short this marketplace inside of your IRA. And I'll show every nuance of being able to do that particular trade. So if you can't join us live, it's in the archive over there. We're actually going to do it Monday, Tuesday morning, okay, coming into TheoTrade chat, and that's this coming week. Now, again, I'm going to start you short. Myself, I'm going to do this in a taxable account. I will short shares of the TLT. But additionally speaking, I'm going to go out there and I'm actually going to short the ZB itself. And the ZB, and again, I have to contract adjust this because it is a futures contract. Adjust for contract changes. Hit apply. Hit OK. Pretty much at the all-time high of the 30-year. Ever. I mean, it's awe-inspiring to see a move like this. So again, stop listening, okay, to the fact that, oh yeah, bonds are supposed to be down, market's supposed to be up. The bonds are actually moving up. The market's moving up. All right, there's no more alpha to be squeezed really out of either. You really seriously have to consider being on the short side of bonds right now. And that's going to be one of the setups for the week. And this is not something, again, we're going to be holding for the short duration. It's not so much of a trade as it is going to be an investment to the downside of the bonds. So again, stay tuned to TheoTrade all this week. Again, my name is Don Kaufman, and I'll be executing this trade in size throughout the course of the week. Thanks, everybody. Have a great weekend. Bye-bye.